our first gift, you brought us a pair of, let's call them socks. Maybe not exciting and fun, but practical. You could always use it. Tell us about the stock CHEMED. Why does it fit that bill, David?
Yeah, CHEMED is a fairly unknown and under-the-radar company. They are a conglomerate, actually, so they own two businesses, one being Vitas, which is the #1 hospice player in the United States, and the second business is going to be Roto-Rooter, which is the #1 player in a very fragmented plumbing market. And I think that the market really much underappreciates the plumbing business itself. Just look at the water restoration division of this side, which has been one of the largest growth drivers for the company. And not only that, it has turned CHEMED into more than just a GDP plus some market share gain type of business. So just think about it this way. If you have some type of plumbing problem and you go into Google and you type in, hey, I need a plumber, the first company that's going to come up, well, it's probably going to be Roto-Rooter, because this is a very fragmented market with a lot of mom and pop shops that don't have the scale to actually leverage the technological aspect of this part of the business. And not only that, you're probably going to be a price taker in this type of situation too, because, hey, you don't have Uncle Eddie on speed dial to help you, dispose of some waste into your local sewer. So you couple that competitive moat, with a company that's bought back, 20% of its shares outstanding over the last 10 years and grown its dividend at a 10% CAGR also over the last decade. So yeah, I really like CHEMED right now. It's kind of my sock type of company, because I do think that the market's going to reward stable businesses with great capital allocation policies into the future.
All right, let's go to a gift that is kind of a shiny new toy, a little bit more frivolous, a little bit more extravagant, and this is Pool Corporation, which is in a business that its name would suggest.
Absolutely. I'd start by mentioning, what did Clark Griswold want to spend his Christmas bonus on in Christmas vacation? It was a pool. So I definitely like a pool here right now. And even though it might have been kind of a jelly of the month club type of stock given its performance for the year, it has gotten very, very cheap to a point where I can't ignore its valuation anymore. It's trading basically at 2 standard deviations below its historical 10-year averages on basically every single metric. So I do understand why there has been an overhang in the stock over the last 12 months. It's kind of gotten caught up in the slowing housing demand theme, coupled with the fact it probably entered this year with a very egregious valuation. But I do think that the market is naively focusing on the near-term headwinds when they should be focusing on the longer-term growth opportunities, and the fact that the majority of this company's businesses from a revenue perspective come from the services side, not the new build side. So therefore, if there is some type of slowdown or downturn in construction, pool should be somewhat insulated in my mind. So I do like it at this valuation, and I like it even better, where it is at $300.
Okay, let's end with the lump of coal. David, why are you down on Fidelity National Information Services?
Yeah, so, Kelly, I think a lot of people right now are focused on Christmas, but they're overlooking my favorite holiday, and it happens to be observed today. It's called Festivus. So I'm going to take a page out of Frank Costanza's playbook, and I'm going to air my grievances on FIS. And I'll tell you, I got a lot of bone to pick with these people. What I've learned in my career is that the worst thing that a management team can do is lose the faith and trust of market participants. And over the last year and a half, that's exactly what FIS has done. Lost the faith of investors. And yes, it may be recognized in current valuations. And I would probably give Stephanie, who's the new CEO, some credit that I think she has taken, some correct steps in acknowledging these problems and leading the company in a different direction. They've done a lot of cost reductions and just recently announced, a strategic review that could put a floor in the stock. But hey, that doesn't mean that this stock is out of the penalty box right now. While I'm hopeful that, for this name, there could be an investable story around margins and free cash flow, I think the path to a re-rating in the near future is very much unlikely. So those are my airs of grievances on FIS. They're getting cold this year. I don't like them in the near future.